me now bring on board Harendra Kumar, Head of Institution Broking and Global Research with Elara Capital. Harendra, morning. Thank you for joining us. Given the kind of global backdrop we are in, do you think the risk on or risk off trade has started again? Because ECB has indicated that they are running out of options. Fed has indicated that no QE3 is coming, and copper and crude, major indicators of risky assets, have declined.
Yeah, I think that is pretty much the setup today, and also I think what is worsening the aspect is that the local regulations that are upsetting the FII. So these two events in combination are playing a havoc with the sentiment currently that started off with the bang in January. And increasingly now, I think the setup of the market is becoming weaker with inflation, which is very sticky, with FIIs who are cagey, and liquidity, the tap that was likely to continue is looking to dry up at this given point of time.
Harendra, news out on the entire cement pack that perhaps the CCI may actually slap a show cause notice on some of these cement players, and that they are going to submit their final report on a cement cartel in the next 15 days. What is your fear of what may actually come about in this report?
I think these, this kind of news do come out all the time, especially during, wherever the prices move up. But I'm not too sure whether there has been any material action over the years on this front. I think the catalyzation, or for that matter, the price mechanism that the companies operate in has worked quite effectively and has sustained even at low capacity utilization. So I would not be too worryful about this impact having a long-term implication on the sector. I think the prices will recover in terms of a long-term structural story. So I think it will be buy on declines for large cement caps, and obviously the mid-cap cement stocks are very attractive in valuation. So I would use any corrective correction in the prices as good entry points.
Harendra, if one maps foreign liquidity, foreign institutional investors, at least in the month of April, they are in a departure mode and they've been net sellers in the cash market. So what are the sound bites you're picking up from some of your global investors? Are they in a mood to sell India now?
Yeah, see, I think the money that came in obviously was largely ETFs. So the long-only funds were pretty much looking to evaluate India, and the market was just about turning attractive when the whole beta trade came and upset the calculation. But I think that the setup is becoming attractive again for long-only investors and not for the hedgies and the ETFs. So I think as the market meanders downwards, the long-only funds would be again interested in India, and hopefully by that time the valuations would be attractive and the cloud over the GAR, etc. would have cleared. So my guess is the setup for the next 3 months or for the quarter is weaker, and it would turn attractive probably closer to June, July.
Are you convinced as CLSA that Indians are getting rich, and when Indians get rich, they will only buy pressure cookers?
Actually, it's not only about that. I think the whole structural setup for brown goods is very attractive. We were the first to cover TTK Prestige at ₹500 and continue to track the stock very closely. I think, as the migration happens from, cooking gas towards electricals and then microwaves, I think the whole setup for TTK is very good. It's very less capital intensive. The management is very strong, and it's continuing to deliver excuse me, on the numbers. So I think brown goods as a space, I think it will reflect on Havells as well, and Bajaj Electricals also. I think the whole space looks very attractive and needs to be continuously tracked for the next 2-3 years.
Within the consumer durable space or the consumer name, Harendra, at Elara, what are your other ideas?
Yeah, like I mentioned, Bajaj Electricals, Havells. We also cover stock called HSIL, though exactly not in durables, but it's also into consumption, as per capita income increases, which is faucets and they are into sanitary ware, and they're doing pretty well. I think the other company that we like, again, as a trade-off to consumption is Cox and Kings. So I think as per capita income increases, Indian consumers are going to are going to travel both locally and globally, and these are all very structural setups that are getting built over the economy.
Harendra, what about the 2 new listings, NBCC as well as MT Edicare? Have you read them, and do you like anything?
I think education as a space, per se, the models that are getting followed are not scalable. So they are okay in terms of a very boutique place. So if you get them at reasonable valuations, okay. But I think either of the ideas, I think the analyst just briefed us early in the morning on the show. I think the outlook is not exactly too robust in terms of fast-paced growth. So I think it is better to book profits if you have anything on the table.
And the Infosys Technologies is due to declare numbers tomorrow, and they will also declare not only the Q1 guidance, they will also indicate that what they propose to do or what they could do for FY13. Now, this time around, Street has very little or limited expectations from Infosys. But given the way how US economy has improved off late, do you think Infosys Technologies tomorrow morning could spring in a surprise?
Yeah, absolutely. I think Nikunj, if you look at the setup of Infosys for the last year, it had a run up into every quarterly number that it would announce, and it would crack around 5 to 7% on the result day or probably higher, and that trend continued for 4 quarters. And I'm not too sure whether that trend will get broken this quarter or not. But like you mentioned, I pretty much agree with you. Look at the setup. The rupee is at 51, 52. It is not looking to appreciate dramatically over the course of the year. And you have a US economy which is recovering. And this setup has come to us after 2000, and exactly after 12 years. And just look at businesses who are operating at the rupee at 44, and suddenly you see rupee at 51. I'm sure they would be, delighted at this macro backdrop. And generally, tech companies have tended to do well when US comes out of recession, where the outsourcing picks up. I think that increasingly the commentary of tech majors is looking better, though not exactly very bullish, but it is looking to improve progressively. So I think there are very strong chances that the tech index, will start outperforming the broader index in H2 this year. So this would be the period to start accumulating in the next 6 months tech stocks.